Hello friends, last week in my video, I basically discussed whether there was going to be a pre-budget rally and if at all there was going to be a pre-budget rally, would PSUs participate in this rally or not? Why was I adamant about adding PSUs? Why the emphasis? In this video, I'm going to talk exactly about that. Well, you see what happened on 4th of June, which was the day the election results were announced. The PSUs melted like ice on a hot asphalt road. Now, what I have been doing is, for my online family, I've been sharing MWPL data in a much more detailed format than I used to share on my free Telegram channel with you ahead of the election results. Then I was giving you the top 10 or top 15 MWPL movers. Now I'm giving you all FNO stocks on my free Telegram channel right up to Monday night, the day before the budget. Now, what I saw in the week gone by was that there was a huge amount of volume and churn that I'm going to discuss in the special segment at the end of this video, just before the segment when I reveal my trading strategy. I share my trading strategy for the week ahead with you. But for now, let's plunge right into our regular format. And coming up on your screen is the market roundup window. And that tells you that it was yet again the broad-based Nifty 50 that led the rally. And the Bank Nifty basically brought up the rear. The US dollar index gained smartly, and that pushed emerging market indices somewhat lower. The rising dollar also pressurized bullion and energy. Remember, on my free Telegram channel, I have been very vehemently debunking the super cycle theory, in energy right since 2021, and B in industrial metal. Lots and lots of data I have shared with you on my Telegram channel. The contact coordinates are with you on your screen right now. Do connect with me if you're interested in learning how to think like a pro. Now, the US dollar index, like I told you, went higher, and that propelled the USD INR also, which means the rupee fell against the dollar, and not only fell against the dollar, but it is now approaching an all-time low against the dollar. This is one of the aspects that I need to discuss with you in the segment where I discuss whether the market is going to fall on budget day or after the budget is completely understood by the market, like it did on 4th of June, the day election results came. Now, the Indian 10-year benchmark bond yield came down by 2 basis points, which means the bond prices went up, which was a saving grace for the Bank Nifty. The NSE market capitalization fell, which means the sell-off was across the board. MWPL went up, albeit very cautiously. At 42.05, it's definitely not the highest in the recent past. Where the US markets are concerned, barring the headline Dow Jones Industrial Average, the Nasdaq and the S&P 500 came down sharply. Now friends, let's look at the ratio chart. Those of my online family who've been monitoring the way I analyze the markets would remember that I have shared the weightage of all the sectors that comprise the Nifty 50. At 34% plus, the banking and financial sector space is the most dominant and swing sector of the Nifty. Whichever way the banking and financial sector stocks go, that way the Nifty also has to go. The next heaviest weighted sectors, 2, 3 and 4 put together do not comprise 34%. Now that is how dominant is the banking and financial sector service space for you. And on your screen right now is the ratio chart of the Bank Nifty with the Nifty 50. How do I get it? I go to TradingView. In the script task in the search bar, I type Bank Nifty / which is divided by Nifty. Now what I have done is divided the Bank Nifty by the Nifty 50 to see what ratio it is trading at, and it is the fourth consecutive week that the Bank Nifty has been weakening against the Nifty 50. Not a great sign. Now remember, this is 34% of the weightage of the Nifty itself, which seems to be struggling. That's not exactly very good news. This is where the weakness is likely to be on budget day. This is what I'm going to watch. And why PSUs? I'll come in that special segment. Friends, the market roundup done. I now come to our in-house exclusive indicators. I start with the MWPL. And what you're seeing is that in spite of the fact that the MWPL has crossed the 42% mark, it's definitely not as high as the MWPL that we've seen in two prior consecutive derivative pre-expiry weeks. Not only that, but on Friday, I actually saw MWPL fall a little. Now, this is slightly unusual because MWPL normally peaks out on Monday or Tuesday of the expiry week. Whenever MWPL peaks out a little in advance, I think the markets have always displayed a sign of nervousness. So it's understood there's a budget up ahead, and which is why the markets seem to be a little cautious. Now, this is one point that we need to keep in mind. Now I come to the stock and index futures turnover. Remember, these are three concurrent series, and so it is July, August, and September. What we've seen is a marginal fall in the weekly turnover. Not very surprising. It was a truncated week due to a holiday. Now, friends, I come to the advanced decline ratio, which has been negative since a fortnight. Now, last week, I told you that at 0.86, this was a minor concern because intraday, one Marshmallow traders were not showing signs of being gung-ho. The Marshmallow theory is explained in a separate video. The hyperlink to that video is in the description and in the pinned comment below. Now, the advanced decline ratio has actually fallen even further to 0.70. What it does tell me is that for every 100 losers, there were only 70 gainers. Here again, it's not exactly a great sign. If at all the market is to have a sustainable up move, the price and the advanced decline ratio should be going up in tandem. Now, friends, I come to the basis. Basis is nothing but the premium or discount prevalent in the future compared to spot. Just like the options premium, basis also contracts as expiry gets closer. So what we have seen is the Nifty basis actually go into inversion. We are 1.80 points negative for the Nifty and 5.05 rupees positive for the Bank Nifty. That tells me that at higher levels, there's been some amount of selling, maybe even aggressive short selling. So that is something you need to keep in mind in the pre-budget week that ended on Friday. Now, friends, our exclusive in-house indicator, the impetus, you won't get this anywhere on the internet. You've been enjoying this for almost 4 years now. Last week, I raised a red flag because the Bank Nifty impetus had fallen sharply. And I told you that the markets had basically gone up on very poor momentum. The Nifty impetus had also come down, but not half as aggressively as the Bank Nifty's impetus. This week, what I am seeing is the Bank Nifty impetus has plumbed to the lowest point in the chart a period of 20 weeks. That's not exactly good. Traders seem to be extremely nervous about something in the Bank Nifty. And do remember, my friends, 34% weightage of the banking and financial sector space in the Nifty 50. So even though the Nifty might attempt to go up, the banking and financial sector stocks have the capacity to either curtail the rally or even pull it down into negative territory. So let's be careful out there in the coming week. Now, friends, I come to another exclusive in-house indicator, the LWTD. This is one of the most accurate indicators that we put out in the public domain, and it has sunk further into negative territory at minus 0.67. It is lower than minus 0.50 in the prior week. That tells me that at lower levels, one should expect even less buying support. Can short covering cushion declines? Hey, yes, of course. It's an expiry week ahead. So short covering can always come in, but can short covering trigger a bull market? I don't think so. It can trigger a temporary up move, but a sustainable bull market requires fresh buying. So I think LWTD is not in a mood to indicate a very strong, vibrant bull market, unless of course the finance minister springs a positive surprise in the budget and gives a very, very market friendly budget, which is what we need. Friends, in-house indicators done. I now come to the bond market, and what you are seeing on your screen is the weekly chart of the Indian 10-year benchmark bond yield attempting to break new ground on the downside, which means bond prices are getting higher. Not very difficult to comprehend why. Now that the Indian bonds, sovereign bonds, are listed in the overseas indices, JP Morgan Index, the FIIs are foreign portfolio investors are buying into Indian sovereign bonds because of the interest rate differential, and bond prices are going up due to demand. But do remember what I told you in my special video. The thumbnail of that video is up here, and the hyperlink is in the description and in the pinned comment below. I told you, don't jump the gun and get overly gung-ho. What the bond investors will watch is how much money of this bond mop-up is going to go into social welfare spending. If at all this budget is populist, it gives a lot of money to state governments, etc., as is being reported in the mainstream media. I think the bond markets may take it amiss. Do remember the USD INR chart, as you can see on your screen right now, is indicating that the rupee is at an all-time low, near an all-time low against the dollar. So these are two indicators that you need to keep your ears to the ground and watch the signals of the market. Friends, the bond market done. I now come to the bank Nifty, which underperformed the Nifty 50. And like I said, 34% weightage of banking in the Nifty is no small loose change. What we saw on the daily chart, which you're seeing on your daily chart on your screen, is that the index rose on 2 out of 4 trading sessions last week. It has slipped to the lower end of the weekly range by Friday. The price is above its month-long moving average, so the short-term outlook is okay for now. But anything can happen in a budget week where price swings are going to be aggressively high. Now, 51,900 level is a momentum determinator below which the short-term outlook might become slightly weak. But don't be in a mood for hair splitting about levels before the budget is announced. It is only after the budget that price discovery mechanism will set in, and that too after the fine print and the details are analyzed by the knowledgeable players in the market. Now, being a very high volatility week, traders should trade small lots and wait for bigger price moves, and that concept is something I have explained to you in a video. On the thumbnail you're seeing on your screen, the hyperlink is below the video in the pinned comment and description. So trade small but wait for larger price moves, because the risk footprint will be much smaller in this strategy. Avoid the temptation of trading for small gains, because that might become a wide loss if things go wrong. Let's go to the weekly chart, which shows the second week of declines from the higher levels, as you can see on your screen. A second consecutive bearish candle here. That too an inverted hammer. Do note that the impetus chart has already shown that the Bank Nifty lacks the momentum, and it is clearly extremely nervous. While the price is above its 25-week exponential moving average, which is a proxy for 6-month-long holding on cost, the index is still shaky till the all-time high of 53,358 is not yet surpassed. So we need a breakout as soon as possible. Friends, in the week before last, this index was number 6 on the most volatile counters list in the FNO based on statistical beta rankings that we maintain in-house. It slipped by 6 notches to number 6. Now, that is somewhat of a relief because volatility has come down. But Detrending like this with absolutely poor momentum also may be a precursor to a bigger decline. So let's be careful out here. Last week, I advocated an estimated range between 53,900 on the upside and 50,650 on the downside, which held perfectly well. No thanks to our work, but because the market was in a narrow range. In the coming week, I estimate a range between 53,800 on the upside and 50,700 on the downside. Do remember, it's a budget week and there is a big possibility of these thresholds on either side being overcome very, very easily. In addition to these levels, please also monitor the daily, weekly, and monthly pivot levels, which are updated only on our free Telegram channel. So they will help you laser precise your entry and exits on your trades here. Friends, the Bank Nifty done. I now come to the Nifty 50, and the daily chart of the bank on the Nifty on your screen tells you that this index rose on 3 out of 4 trading sessions. But Friday, what we saw was a slam dunk fall that eroded the majority of the weekly gains. The daily chart on your screen shows a bearish engulfing pattern. Now, unless the bulls clear the high of this candle at 24,855 levels, a sustainable up move may remain elusive. The price is above its month-long moving average, so the short-term outlook is positive, but only for now. Turning to the weekly chart, what we are seeing is an inverted hammer. That clearly shows that somebody has put a brake on the upthrust. And like I said, unless the high at 24,855 is not overcome forcefully, this level will remain as a hurdle. Now, the inverted hammer has come after 3 consecutive bullish candles, but the bullish candles were progressively smaller in size. That means a lot of follow-up buying is needed before a fresh rally can begin again. The price remains above a 6-month moving average, so the medium-term outlook still remains positive. For now, we need to wait and see what is announced in the budget. Now, friends, in the week before last, this index was number 19 on our most volatile counters list as per statistical beta rankings that I maintain in-house. It rose 5 notches to number 14. Now, that tells me that volatility went up. That means challenge levels are going up. Not exactly a very great sign. Last week, I advocated a range between 25,100 on the upside and 23,925 on the downside, which held perfectly well, all because the range was small. In the coming week, I estimate a range between 25,100 on the upside and 23,950 on the downside. Here again, like I said in the Bank Nifty, the range may be overcome in either direction because it's a budget week and it'll all depend on what is announced here. Friends, in addition to these levels, please also monitor our daily, weekly, and monthly pivot levels that we update on our free Telegram channel. Also, do remember, trade small, wait for bigger price moves, and keep your tail risk hedges, Hacienda hedges, in place like I have mentioned in this video here. These hedges are absolutely lifesavers in case markets are to fall like they did on 4th of June, where my online family, who I've been telling in my live mint column and in my videos since months to keep tail risk hedges, escaped a financial disaster by having these hedges in place. So please do not get too aggressive out here. Friends, I now come to the last bit of statistical analysis wherein I analyze the retail risk appetite by the footprint of their turnover in the 4 derivative segments. Starting with index futures, where the turnover percentage gain by 5 basis points is indicated as a blue line. Stock futures turnover contribution went up by 28 basis points. It is indicated as a red line. The lowest risk instrument in the derivative space is the index option segment, which saw a turnover contribution fall by 147 basis points. It's indicated as a green line. And stock options, which are relatively more volatile as compared to index options, but definitely a whole lot less than futures, saw the turnover contribution go up by 113 basis points. Now, friends, what does this data tell me? This data tells me that traders were placing bets in the higher risk segment in futures and even in the options, the higher risk stock options. So I think that hangover, that momentum, that kinetic habit of going long and buying the declines was persistently seen last week. Now, whether the high turnover and high positional build-up at 42% plus MWPL results in a crowded exit due to panic is something that I'm going to discuss in the next segment. I want you to be with me very carefully. Now, friends, in this segment, we'll discuss whether the market has a probability of falling like it did on 4th of June, which was the election results announcement day. Like I told you before, the banking and financial sector space contributes 34% weightage, and that is showing signs of weakness. Not a good sign. Imagine an aircraft which has three engines. One of the three engines is sputtering, coughing, and threatening to die out. Would you feel comfortable flying that aircraft? Maybe it's not going to crash immediately, but it's giving you an ominous sign. So, this is definitely a red flag, and that is something we need to watch out for. The USD INR chart on your screen. Now, this is extremely nervous in spite of the fact that inflows have started from the bond market, from the overseas investors and pension funds, etc. But still, the Indian rupee is nearing an all-time low against the US dollar. I don't consider it as a very gung-ho indicator. I would want the rupee to start showing strength against the dollar. Number three, the markets, like I told you in the video, on whether there will be a flurry of inflows coming in from FPIs in the Indian bond market. Here is the thumbnail of the video. The hyperlink is in the pinned comment and description below. I told you they will watch where the money is being spent. Do remember, when a guy lends you money, he wants you to put it to commercially viable uses. So, if at all they feel that the budget is populist, the bond inflows might just be a little slower. They will continue. I'm gung-ho, I'm positive about this aspect, but the flow, the rate of inflow of the bond markets might be a little slower than what the average guy on the street is so gung-ho about and so exuberant about the immediate prospects. It might take a little while longer. That means the rally might just be a little delayed. Now, the PSU sector. This is something that I discussed, and my title of the video last week itself was whether PSU shares will participate in the rally. Now, friends, for my online family, I have started sharing the MWPL data of all the FNO stocks since over a week. Why? I want you to be your own judge as to whether people are unwinding their long positions in PSUs or are they adding to it. Obviously, if the price is going up or down, if MWPL, which is market-wide position limits, and MWPL is a broader concept as compared to only the open interest of the front month series. So if MWPL is coming down, in spite of the fact that noise appears to be in the public domain about a very rosy outlook, somebody is selling. I would prefer to trust the numbers, the data, rather than voices. Data does not lie. And what I saw last week was a very high churn ratio. On my social media accounts, I shared a test case of a churn chart. What, first of all, is the churn? The churn is the ratio of the open interest and the turnover. Now, what if the open interest is 1 lakh lots and the turnover is 1,50,000 lots? What does it tell you? It tells you that people are actually trading a lot more frenzied manner. Not only is the turnover going far higher than the total open interest, That means the small guy, the average trader who buys and holds, is sitting quietly. The big guy is increasing his traded turnover in a very aggressive manner. I refuse to believe that anything happens in the financial markets without a reason. And since these are financial markets, the reason also has to be financial. Because what you see is what you get does not exist in the market. Is it possible that in this flurry of a great degree of churn, somebody could be unwinding open interest and at the end of the day, the MWPL comes down? So, hidden in that very high turnover, there is unwinding of positions. I saw that happening last week, which is why I said watch the PSUs. Now, in a high churn, MWPL therefore becomes the second point of filtration of what is happening in these counters. And what if the MWPL still remains very high in the PSUs? My question to you is, what happens if there is any adverse news? Very high MWPL means a lot of emotions, lot of greed, lot of financial commitments also are riding on that counter. What if there's disappointment? Where will the selling come? Where there's highest amount of hope. Now these become crowded exits. I will be uploading the MWPL data right up to the night before the budget every day. It is only on our free Telegram channel. My contact coordinates are on your screen. Do connect with me there. We don't provide any paid services, so it's all free for you to view. The final aspect that I would watch on budget day and determine whether the markets are going to take a nosedive or not are some contentious issues. I have seen traders behave very nervously. Do you know that the market data can actually tell you how nervous, how emotional, how greedy, how aggressive traders are? Do you know there is a branch called behavioral technical analysis which deals in human behavior, which is gauged by actions on the financial market platform? These traits do exist in clinical psychology and clinical psychiatry. So, therefore, what I did see last week was traders are still nursing a hangover of what happened on 4th of June. They are nervous, and rightly so, because what is in the pipeline are a couple of contentious issues. A, will derivative trading be treated or continue to be treated as business income, or will it be treated as speculative income? If it is treated as speculative income, I think it will be a sentiment dampener from the market's point of view. If at all derivative market lot size is tweaked exactly like SEBI's proposal has been between 20 and 30 lakh rupees per lot as compared to the existing 5 lakh rupees per lot. That could be another dampener, because it will very simply mean that your capital requirement now, right now, the contract size is 5 lakhs. If it goes to between 20 and 30 lakhs, it means your monetary requirement will go up 4 to 6 times. I'm not saying 4 to 6%, 4 to 6 times. Now, that means a lot more traders may not be able to trade in the F&O very easily. Thirdly, there is also talk about reducing the number of strike prices available in the options game. If that happens, deeply out of money option traders will also get sidelined. And then you have new instruments coming, just as I forecast in my previous video, of long short funds, inverse ETFs. Now, this is something that I specifically mentioned, that foreign high frequency traders, artificial intelligence traders and algo traders coming in India will demand these instruments, and I said we will have to give it to them. So when you are celebrating how many FIIs are registering their offices in India, do also understand that they will also demand short selling instrument facilities, which is what long short fund and inverse ETFs are. So net, what do I think is the mathematical probability of a decline on budget day? Now, At the risk of sounding cautious or basically shamming you, I would say that I give it a 50-50 percentage probability. Why 50-50? Because I'm undecided as to what, and I'm basically not knowing as to what the Honorable Finance Minister will actually announce. But if you ask me, from the data that I've seen up to Friday, A, churn ratio, B, MWPL, C, torque indicator, what I have seen is I might just go a little further and say there is a 51% probability of the market falling and 49% of the probability of market gaining. But like I said, I don't have any way to gauge what announcements will come. The announcement could be a positive surprise. Let's hope for the best and keep our fingers crossed. Now, friends, I share my strategy for the coming week ahead. First of all, I would trade small and wait for larger price moves, just as I said in that video. I will keep tail risk hedges in place, and I might just keep a little more than a tail risk hedge on PSU stocks because of what I have seen in the last 1 week, 10 days. It's not an open secret. The entire MWPL file of the entire FNO list of the last 1 week is on my free Telegram channel. Feel free to go and backtest it at your own convenience. And I continue to remain bearish on oil and gas. Hey, there is no super cycle in the commodity space. What you did see was a temporary spike due to the Ukraine war, and that too, it lasted for not more than a quarter at best. So what you saw on Friday was a slam dunk fall in oil. Natural gas prices might just go up due to cyclical considerations. Do remember, the onset of winter starts in the Western countries on 1st of October. Natural gas prices cyclically tend to be bullish right till the vernal equinox. We in India call it Holi. So you might just see a positive cost of carry till Holi of 2025, and that is a decline after that. So this is not a super cycle. It is a temporary cyclical up move. You might hear a lot of shrill chants, hey, a bull market is here, hey, a super cycle is here in natural gas. Good luck to you. Last week I said industrial metals, even if they appear to go up, will run into selling resistance and overhead supply, and that will make metal mining company stocks extremely nervous. Hey, I was proved right. So here you go. There is no super cycle even in copper. Copper is actually on the verge of a breakdown because if it falls 20% from the highest point, peak to trough, the classic Dow theory says it's a bear market. So there goes all that drum beating and tooting of horns saying copper is in a secular super cycle and a bull market. Think about it as a real world trader. Let's not talk about it from a point of view of a fireside spectator. As a real world trader, how many times have you paid rollover charges? What about your mark to market losses? Now that prices are going to come down, what if the super cycle chants are reversed and say, okay, copper is not in a super cycle. Losses are already in place in your books. I have been telling you the reason why metal super cycle is elusive because of Latin America. Don't forget the LATAM factor. I've explained to it many times on my Telegram channel. Now, I will continue to seek theta decay opportunities on the interest rate sensitive sector. I told you this last week as well. I am beginning to bet on theta decay in the IRS stocks, interest rate sensitives. What are interest rate sensitives? Banks, non-banking financial corporations, stocks and sectors that are heavily dependent on EMI-based sales for their top line and bottom line, and companies that are very heavily up to here in debt, and therefore a little bit of change in interest rates makes a lot of difference to them. Now take a look at the table. What does it tell you? What are the performance metrics of these interest rate sensitive stocks? Are they even matching the returns of the Nifty over the last 4, 12 and 20 weeks? You be the judge. I go by data. I don't get convinced. If at all I'm being given information which I feel is dipping, disinformation protocol, DIP, dipping. You dip me, I'll tell you talk to my hand because my ears are not listening to you. I depend on data, not on anybody's inputs. Last week, we saw a decline in bullion on hopes of early resolution of the war in Gaza because the possibility of Donald Trump returning to the White House. He's been a votary of immediately shutting down the Ukraine war and basically seeing to it that US presence is reduced in all theaters of war. So basically, what you are seeing is gold and silver come down sharply, but hey, give me large enough declines. And I would consider buying provided the prices actually fall a whole lot more aggressively. Because I think the long term bull market in bullion still remains intact. I stand by my view of pro cyclical hysteresis in financial markets in the calendar year 2025. The only thing is in bullion, you should avoid buying in futures and options because the cost of carry, commissions, taxes, and other execution costs will eat into your profits. Don't forget your FD is giving you 7% yield, but the cost of carry in bullion along with other execution costs, commissions, and taxes exceed 18%. That's not the kind of interest that I'm willing to pay. It's criminal. All right. So if there are any more ideas, I will be very glad to share them with you on our free Telegram channel. Do make it a point to connect with me. Friends, before I sign off from this video, a reminder to subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put about here. In the comments segment, do let me know how my videos are helping you become a better trader. And hey, please share my video with your family and friends and your social media contacts. Thank you for your patience in being with me in this video. I wish you have a very profitable week, trading week in the budget ahead. Thank you and all the best.